Did you pay yourself properly this year? If you're not sure, you're not alone. As it turns out, many business owners struggle with this, but don't worry, I've got you. In this video, I'm going to walk you through what you should do to fix that problem so you can minimize the damage. Plus, make sure to stay until the end of the video where I'm going to walk through how to make sure that this problem doesn't happen next year and that you pay yourself from the beginning. Hey everyone, I'm Jamie Trull, CPA and financial literacy coach, and on this channel, you'll get all the information you need to stay informed, organized, and profitable in your business finances, so please make sure to like and subscribe. So the first thing that I want to make sure to address is who needs to be paying themselves a salary to begin with. And the IRS is pretty clear on this one. If you are a corporation owner, meaning you have an S Corp or a C Corporation, and you are actively working in the business, then you should be paying yourselves a reasonable salary actually through payroll. And that means withholding taxes and all of the things that you would do as an employee. On the plus side, if you are a sole proprietor or an LLC that has not elected to be taxed as an S Corp, then you're off the hook for this. You do not need to pay yourself on salary. In fact, you're not supposed to pay yourself on salary. Instead, you're only going to take owner distributions, owner's draws from your business, and that's much simpler, and you could just do it by transferring money from one account to another. So why is it important to pay yourself a reasonable salary? So if you're an S Corp, for example, you can pay yourself a reasonable salary, and you're probably also going to take out distributions. Those distributions, or owner's draws from your business, don't have payroll taxes assessed on them. That's one of the benefits of being an S Corp. In fact, that's the main benefit of being an S Corp, is that for a portion of your earnings, you are able to save on payroll taxes. That's Social Security and Medicare. But there is a catch. You do need to be paying yourself a salary for the work that you do in your business. And because that is earned income, that means that it will have both income taxes and also it will have payroll taxes assessed on it. So those payroll taxes are that 15.3% of Social Security and Medicare taxes. So the main reason that you need to be paying yourself a reasonable salary is because the IRS says you need to. And if you're ever audited, that's one of the things that they are going to be looking at. Now, if you're curious to learn more about reasonable salary, how to come up with it, definitely check out this video. I have lots of content on this channel to help you with just that. But even though this is required, it's really common for business owners not to be doing this properly. And sometimes it's because they weren't fully informed by their accountant of what the requirements were, or maybe they just completely forgot. But either way, I'm going to tell you what to do now. So when it comes to fixing this problem, timing matters. So I'm going to separate into two buckets because the actions you'll need to take are different depending on what time it is in the year. So if you have a normal fiscal year end of December 31st and you're watching this before the end of the year, you have more options and more flexibility. So I'm going to talk about that first. But stick around if it is the following year and you're trying to figure out what to do, there are still options for you as well. So in either case, whether it's the end of the year or the beginning of the next year and you're trying to figure this out, the first thing is to figure out what your reasonable salary should be to begin with. And I don't want y'all using any kind of rules of thumb for this. Sometimes accountants will talk about a 50-50 or 60-40 rule. Really important to know, that is not a real IRS rule. That will not be protected if you are ever audited. And sometimes it actually results in you paying more taxes than you really need to. So the very first thing that I want you to do is figure out a real estimate for your reasonable compensation. You can actually do this in under 30 minutes. All you got to do is grab a reasonable compensation report and study. That's something that I offer and I review each and every one. I've partnered with a company called RC Reports. They are the premier company when it comes to reasonable compensation. They have all the data to back up their calculations, and I can help you make sure that you're not paying more than you need to. Now, if you do purchase a report and you're trying to get this information reviewed before the end of the year, just send an email to our team. The link is down below to send that email, and let us know after you purchase your report that you have a quick timeline, and we will make sure to prioritize the review of your report. So what do you do once you have this reasonable salary, once you know what you should have paid yourself? Well, that's when you're going to do a payroll run. At the end of the year, you can do a catch-up payroll run in order to pay yourself that money. But that assumes you have enough money to pay yourself currently. So if you don't, if maybe you paid yourself distributions this year and you don't have any money left to be able to pay your reasonable salary, instead of paying yourself that actual cash, what you're going to do is you're going to reclassify some of those distributions as salary. Okay, so the important thing to know is before you pay any distributions, you should have hit that reasonable salary number. So let's say you took out $70,000 in distributions and didn't pay yourself any salary. You get a reasonable compensation report and it says your salary should have been $40,000. What you're going to do is reclass the full $40,000 from your distributions to salary. And that means paying payroll taxes and income taxes and filing all those required forms like your 940s, your 941s, and your W-2s. Now, again, if you don't have the cash and you're just reclassifying distributions you already made to yourself, that's going to be a journal entry in your system. And in your payroll system, you're going to make sure that you're not moving actual cash. The only cash that should move is the cash to pay those taxes. So depending on your payroll system, there is typically a way to run a non-cash payment. And then what you would do is in your financial statements, in your general ledger system, your accounting system, you would reclassify some of those owner's draws to salary. Now, of course, this is probably going to be easiest if you're working with an accountant or bookkeeper to help you with this process. But again, this will be much easier to fix if you're doing it by the end of the current year. But what happens if you're watching this video next year and you're thinking, well, wait, I didn't pay myself a reasonable salary at all last year. What should I do? So the first thing is, if you did not pay yourself distributions from your business at all, maybe your business wasn't profitable and that's why you didn't pay yourself a salary, it's probably not as big of a deal. Now, you're going to want to make sure that you start putting yourself on salary ASAP. So I would still run a reasonable compensation report to figure out what that salary should be, but it's not going to be as big of a deal for the IRS if you did not take any distributions. So what are your options if you did take distributions and didn't pay yourself a reasonable salary or didn't pay your full reasonable salary? Well, there are a couple of different things you can do. The first thing is to roll the dice. And that just means hope that everything's fine and not change anything. Now, as a CPA, obviously that can't be the one that I recommend. However, you can decide on what your own risk assessment is there and what risk you're willing to take. Now, importantly, if you do get audited in the future, they can go back and look, and it can get expensive with fines and interest and things like that. So keep that in mind when you're doing that risk assessment. What I recommend instead is to talk with your payroll company. Depending on what reports have been filed at that time, there may be a way to run back payroll. So you might be able to do that even in the new year. So I would reach out to your payroll company and see what they recommend given what the timing is on the year. Now, you still might have some interest and fines and things like that because you didn't pay in throughout the full year, but it'd be way less than what it would be if you waited and later down the line got audited by the IRS. And similarly, that could include reclassing some of those distributions as salary and then filing all those necessary reports that are required for payroll and paying those payroll taxes that you didn't previously pay. But again, you're still going to want to start with figuring out what that reasonable compensation is, and then you're going to want to make sure that going forward, you've got this on lockdown and you are paying yourself throughout the year. So if you're looking to make sure that this doesn't happen again, like I said, start with that reasonable compensation report and then go ahead and get set up on payroll if you're not already. So you can go to jamietrull.com/payroll and see all of my payroll recommendations, including what I recommend for S Corp owners who are just running payroll for themselves and want to do it in the most cost-effective way. Now, just a quick word of encouragement for this is a fairly normal problem. You are not the only one who has done this. That is why I'm making this video. So just do your best to make it right and then make it right going forward. Do it the right way. Make sure to subscribe to this channel because I do a lot of content specifically for S corporations and to make sure that they are being compliant with the rules because there are so many things that accountants don't tell you when you become an S corp. And so that is why I'm here to help you with that and to make sure you don't pay more in taxes taxes than you need to. And if you've realized that your entire systems need an overhaul in the new year, I have some content for you. Definitely go check out this video where I walk through the 3 systems that I recommend every business owner have. And as it turns out, a new year is the perfect time to be putting in new systems for your business so that these things don't happen again. Thanks so much for watching. If you liked this video, please make sure to like, comment, and subscribe, and I will see you next time.